Welcome, everyone, to the Deep Dive. I'm Lex.
And I'm Vera. We're from the Excel Edge podcast show.
And yeah, a big thank you to all of you listening in. Seriously, we love having you with us.
It's always great to connect and talk about what's happening in the Philippine property scene.
Today, we're really honing in on the Philippine real estate market. It's definitely evolving. We want to break down what that means for you.
Exactly. Whether you're maybe looking to buy your first home here in the Philippines, or perhaps you're already investing in property and wondering what's next.
We've been digging into some expert analysis, trying to get a clear picture of where things stand right now and, where the opportunities might lie ahead.
Yeah, the goal is to cut through some of the confusion and give you insights that are actually useful for your own plans.
Okay, so let's jump into it. The current state of play. Our sources are pointing to some, pretty significant shifts happening, especially when we look at the office sector.
That's right. One of the big things is the vacancy rate. Projections suggest it could hit around, 16 to 17% by the end of 2025?
16 to 17%. That sounds substantial.
It is. It means a lot of empty office space out there.
And based on what we've read, a major cause seems to be the exit of the POJOs, the Philippine offshore gaming operators.
Absolutely. That's left a huge hole. We're talking, I think the figure was over 2 million square meters of office space suddenly becoming vacant.
Wow. 2 million. You can really see how that would ripple outwards, can't you? It's not just the empty floors.
Precisely. And it's a compounded by another big trend, isn't it? The whole shift towards remote work, hybrid models.
Right. That was already happening, but the pandemic really accelerated it. So companies are maybe rethinking how much traditional office space they actually need long term.
Exactly. They're reassessing. So even though we might see job growth in areas like, say, construction or logistics, that doesn't automatically translate back into filling up those specific traditional office buildings at the same rate.
Okay, so thinking about our listeners, maybe someone's considering a long-term property investment. How do these high office vacancies potentially, connect to the bigger economic picture?
Well, it can definitely put pressure on commercial rental income, for one. And, large amounts of vacant space can sometimes dampen the general buzz or vibrancy of certain business districts.
Mm-hmm.
Plus, wider economic uncertainties, they always play a role in investor confidence, don't they? It just underlines the need to be really thorough, do your homework before making big property moves.
Makes total sense. Okay, but it's not all challenges, is it? Our analysis also flags some real areas of resilience and even new opportunities emerging. Let's pivot to those.
Yes, definitely. There are bright spots. One area getting a lot of attention is the potential growth in global capability centers, or GCCs.
Okay, break that down a bit. Why are they seen as such a prospect for the Philippines specifically?
Well, the Philippines already has a strong foundation, in the global outsourcing world. We have a large workforce, lots of English speakers, and a cultural affinity that many international companies find attractive.
Right, the BPO sector's legacy.
Exactly. And GCCs are kind of the next step, often involving more complex, higher value functions than traditional call centers, for example. So the Philippines is seen as a really good fit for companies setting up these kinds of hubs.
So leveraging existing strengths to attract more sophisticated operations, that sounds promising. But is there a catch? What do we need to do to really grab that opportunity?
Skills. The sources really emphasize the need for continuous upskilling and reskilling. We need to make sure the workforce has the specific talents these sort of more advanced GCC roles require.
Ah, okay. So the potential is there, but we need the right training and education to match it.
Got it. What else is looking positive?
Well, related to the work trend, we're seeing a definite rise in demand for flexible workspaces.
So not necessarily less workspace needed overall, but different kinds of spaces. Kind of, yeah. While long leases for huge traditional offices might be less appealing for some, there's more interest in things like co-working hubs, serviced offices, setups that support hybrid work. Agility is key.
Interesting. Flexibility and modern environments seem to be the name of the game there. Okay. And what about infrastructure? How's that playing into the real estate picture?
Oh, that's a big one. Government spending on infrastructure projects, roads, rail, airports, that tends to be a major stimulus for real estate.
Right. Better connections open up new areas.
Exactly. Improved connectivity makes previously maybe less accessible locations more attractive for both commercial and residential development. It can really unlock value.
Good point. And it seems like within the market itself, different segments are behaving differently. It's not one single story.
Not at all. There are definitely pockets of strength. For instance, the luxury residential market seems quite resilient. It's still drawing in high net worth buyers, both local and foreign, plus expatriates.
Okay, so the high end is holding up.
Yeah. And then there's logistics.
Yeah.
Driven by e-commerce, the need for warehouses, distribution centers. That sector is booming.
Right, all those online deliveries need infrastructure behind them.
Precisely. And also, tourism and what they call experiential retail are bouncing back. People want to go out, have experiences. That's boosting mixed-use developments, places that combine living, shopping, dining, entertainment.
Okay, so luxury, logistics, and lifestyle-focused developments are key areas. Now, you mentioned connectivity, opening up new locations. Are we seeing growth spread beyond Metro Manila?
Absolutely. That's a key finding. There's significant growth potential being highlighted in areas outside the capital region. Think places like Laguna, Batangas, Cavite, Bulacan, Pampanga, Rizal.
So the Calabarzon and Central Luzon regions?
Yes, and also key Visayas and Mindanao hubs like Metro Cebu, Metro Davao, Cagayan de Oro, Iloilo, Bacolod. These are becoming really important growth centers in their own right.
That's really valuable for our listeners, I think, especially if you're maybe priced out of Manila or just looking for different kinds of opportunities. It suggests the map is getting broader.
It really does. These areas might offer, more accessible entry points or perhaps different growth trajectories compared to the capital, worth looking into.
Definitely. Okay, so looking ahead now. For developers, for investors, for people navigating this changing market, what are the key strategies our sources point towards?
Well, number one seems to be proactive planning, really driven by data, understanding where the demand is shifting, what tenants and buyers actually want now.
So less guesswork, more analysis.
Exactly. And alongside that, integrating technology's smart building features, sustainable energy solutions, that's becoming less of a nice to have and more of an expectation, a way to future-proof properties.
Right. Sustainability and tech are increasingly important. Now, what about the challenge we touched on earlier, pricing? Affordability is a big issue for many Filipinos. Are there potential solutions being discussed?
Our sources mention the possibility of policy interventions, things like maybe incentives specifically for local businesses to take up space, or perhaps tiered pricing structures to make commercial real estate at least a bit more accessible domestically.
Interesting. So ways to potentially boost local demand. And on the financial side of things, stability is always crucial in real estate.
Absolutely. There's a call for, strengthened financial oversight, keeping a close eye on short-term capital flows, which can sometimes be volatile, and having robust measures to prevent fraud and ensure overall market stability. That protects everyone.
Okay, so it sounds like a mix of smart development, maybe some helpful policies, and strong financial checks and balances. The big theme running through all this seems to be adaptability.
That's the key word, I think, adaptability.
Flexibility.
The ability to respond to these shifts is going to be critical for anyone involved in Philippine real estate going forward.
So let's try and wrap this up. This deep dive really paints a picture of a market in transition, doesn't it? We've got challenges, particularly in that traditional office space due to POJOs leaving and remote work rising.
But also some really exciting opportunities. The potential of GCCs, the growing need for flexible workspaces, the boost from infrastructure spending, and strength in specific sectors like luxury residential, logistics, and even tourism-related properties.
And importantly, growth isn't just confined to Metro Manila anymore. There's real potential emerging in key regions across the country.
Exactly. And for you, our listeners, whether you're a Filipino looking for that first home or an investor, scouting opportunities, understanding these dynamics is, well, it's crucial.
It really highlights where potential growth might be, why looking at long-term trends matters, and frankly, the need to be well-informed when you make property decisions.
It's about making informed choices in a changing landscape.
Definitely. We really hope these insights give you food for thought as you map out your own real estate journey. And look, if you need expert help navigating the market here in the Philippines,
Especially if you're looking at mid-price through to high-ticket properties.
yes, please do check us out. Our team at Excel Edge Realty is here to guide you. You can find us online at www.com.tom.ph.
That's www.kseledge.com/XCAAK. And hey, if you found this deep dive helpful,
Please do click that follow button wherever you're listening.
and maybe share it with friends or colleagues who might also benefit from understanding these trends.
Thank you so much for tuning in to this deep dive on the Excel Edge Realty podcast.
It's been a pleasure digging into this with you.
And we'll leave you with a question to ponder. As the way we work, live, and interact with our spaces continues to shift, how will you adapt your own real estate strategy to make the most of what's coming next? Think about it. We'll catch you on the next deep dive.